Welcome to the deep dive. We cut through the noise today. Box Inc.'s latest results and their big AI bet. Let's unpack this. So Box Inc., the intelligent content management folks, they just dropped their Q2 Fiscal 26 earnings.
hmm
And right out of the gate, the numbers look pretty good, better than expected, actually.
Yeah, it's pretty fascinating. I mean, in today's market, which is, let's face it, a bit choppy, Box didn't just hold steady. They exceeded projections. Revenue for Q2, $294 million. Analysts were looking for, what, about $290.8 million, so a solid beat there.
Right.
And then on earnings per share, the adjusted EPS hit 33 cents. Again, topping the 31 cents expected. It really indicates strong operational execution on their part.
Okay. Beating on revenue and adjusted EPS. That's a strong signal, no doubt. But tell me, what does this really say about the health of the business beyond just those headline wins?
Well, if you connect the dots, it suggests some real underlying strength. We saw total revenue up 9% year over year, or 7% if you adjust for currency fluctuations. Still very solid. And maybe even more telling is the RPO, the remaining performance obligations.
Right.
That's like a window into future revenue, right?
Yeah.
That jumped 16% year over year. We're talking $1.5 billion.
Wow. Okay.
And get this, the long-term RPO was up 21%. That shows real customer commitment. They're signing longer deals.
Okay, this is where it gets really interesting for me. CEO Aaron Levy, he directly linked this momentum to their intelligent content management platform in this whole AI-first era. He said, enterprises can, and I quote, leverage AI agents to take full advantage of their unstructured data. AI agents. What exactly does that mean in practice? Like, what are these things doing?
Right. That's the million-dollar question, isn't it? How do you go from that vision to, like, actual products people use?
Yeah.
And Box seems to be tackling this on multiple fronts. They've made their enhanced extract agent generally available. That helps automate pulling data from documents.
Okay.
They've got a beta for their remote model context protocol server, the MCP server. Think of it as a secure way for Box content to talk to different AI models, keeping data safe. Very important for enterprise.
Makes sense.
Plus updates to Box AI units, the AI Studio, giving customers more tools. But it's not just building their own stuff. They're partnering like crazy.
Okay. Who with?
Well, there's a Box connector for OpenAI's ChatGPT, so you can use company data securely within ChatGPT. They're working with Anthropic, specifically for financial analysis stuff, with Snowflake, connecting content to data analytics, AWS Bedrock Agent Core runtime.
So, big names.
Big names. And even Salesforce's MCP partner network. They're really trying to embed themselves, make Box the central hub for content intelligence in this AI world.
So it's not just talk. They're actively building, partnering, trying to make the platform essential for how businesses use data with AI. It's about getting more value out of all that content companies have stored away.
Exactly. It's about making the content active, not just passive storage. And you see that reflected in the uptake of their suites offerings, like Enterprise Advanced. That bundles a lot of this AI capability.
Right, the bundling makes sense.
It makes adoption easier for large organizations. It seems to be a key part of their growth strategy now.
All right, let's pivot then. Look ahead. What's Box saying about Q3 and the rest of the fiscal year? What's the guidance?
Okay, so for the third quarter, they're expecting revenue between $298 million and $299 million. That's actually a little bit higher than what analysts were forecasting, around $297.5 million. So continued confidence there. Adjusted earnings per share for Q3, they see it landing between 31 and 32 cents, pretty much in line with estimates. And for the full fiscal year 2026, they actually raised their revenue guidance.
No, interesting.
Yeah, they bumped it up slightly from $1.165, $1.17 billion to a new range of $1.175 billion. And they also raised the full-year adjusted EPS guidance. Used to be $1.22, hits $1.26 to $1.26 to $1.28. Shows optimism.
Okay, raising guidance is always good news. But
Okay.
that raised EPS guidance, $1.26 to $1.28. Isn't that still a bit below where some analysts thought they might land? I think the consensus was closer to $1.34 for the full year. What do you make of that slight gap?
That's a really sharp observation. And yeah, it does seem to highlight a strategic choice. The CFO, Dylan Smith, talked about a balanced financial approach, which sounds like they're consciously deciding to make strategic investments, particularly in product innovation, red AI, and go-to-market efforts.
So investing for growth, maybe slightly at the expense of maximizing short-term EPS.
That's how I read it. They're prioritizing scaling these AI features and winning market share, even if it means EPS doesn't quite hit the highest analyst hopes this year. And the underlying metrics kind of back this up. That 103% net retention rate, crucial customers are staying and spending more.
Right. Retention is key.
And the fact that, what was it, 63% of revenue now comes from those suites, that tells you customers are buying into these higher value AI-infused packages. Plus, they saw an 8% increase year over year in customers spending over 100K annually. So enterprise adoption is strong.
Okay, so the strategy seems sound, even with that slight EPS nuance. What about shareholders directly? Are they getting anything back? Buybacks?
Oh, yeah, absolutely. They're active on that front. In Q2 alone, they bought back about 1.2 million shares, spent around $40 million doing it,
Hmm?
and they still have roughly $112 million left in their current board-approved buyback plan.
So returning capital while also investing, a balancing act.
Exactly. It signals confidence in their own stock value while still fueling that AI-driven growth engine.
So how did Wall Street take all this news? The earnings beat, the AI push, the guidance, the buybacks. What was the market reaction?
Pretty positive, actually. In after-hours trading following the announcement, Box shares were up about 3.4%, hitting $32.23. It suggests investors are, generally buying into the story. They seem encouraged by the performance and especially that very clear strategic focus on AI. The market likes the direction.
Okay, so wrapping this up then, Box delivered a solid Q2. Beat expectations. Strong momentum seems tied to this intelligent content management platform and really a big strategic bet on AI. They're building it, they're partnering, embedding AI everywhere. And investors seem on board.
Indeed. It's a picture of a company navigating, well, a complex environment by really leaning into innovation. This focus on AI isn't just, adding features. It feels more fundamental, which I guess raises a bigger question for you, the listener. How is this rapid infusion of AI into managing content going to reshape work? How we handle information? How decisions get made? What impact could this have on businesses, large and small, maybe even your own workflows?
Definitely something to think about. Thanks for joining us on this deep dive. Hope it gave you a shortcut to being well informed.